What's up, guys? It's time to begin our trade analysis for today. I'm going to be looking at a trend line slash supply zone based strategy this time around. So let's dive in and get started. Now, examining this 5-minute order block print and the price's impulsive movement out of the block's base in particular, we can observe that a supply zone has been developed. When considering these factors together, it appears as though a short bias on a potential directional trade may be the way to go. That said, however, to decide on the right approach in this particular trading range, which is obviously now a major point of interest for us, we must first, I think, analyze technical details as well as more general elements such as pricing range and its potential influence on our entry selection. To put it simply, there must be, I think, a harmonious balance between short-term signals within our point of interest and larger market sentiment. And this is exactly, I think, what we've got here with this depletion in bearish sentiment. Now, I'm sure that many of you watching this video will say, well, under current, how can you maintain a short bias following a 40-some point upward move by the market? Well, my short answer to this fair question would be that it is exactly this seemingly bullish surge that further reinforced my bearish bias. My point is, and as I've already stressed in this channel's videos, is that if you combine bias with the right setup and price action, that's when you will see success. Now, as you can see in the 5-minute chart, after the price reached a peak in exhaustion, it reversed and, as expected, retested the supply zone. Therefore, this supply area, which is important to remember, guys, that identifies as such due to its notable impulse move out of the order block's base, so this supply zone serves as an introductory step in the bias/setup combination I talked about earlier. But in order to pinpoint this first step, it's essential that you understand how to recognize a supply zone. This step is key in my view in helping you as a trader gain an understanding of market behavior so that when the right moment comes, you can then take advantage of it. I think that developing an eye for spotting supply zones will give you the edge over other traders and help you identify high probability trades. So what is a supply zone? Well, basically a supply zone is comprised of two specific aspects, impulse move and base. During a downtrend, prices rapidly plummet from the base due to overwhelming selling pressure as sellers significantly outnumber buyers. Now, this rapid move out of the base is often referred to as an impulse move. Now, in terms of the mechanics of the impulse move, while there may be some short covering during this plunge phase, this usually is quite significant compared to the selling pressure caused by chasers who are caught up in a frenzy and drive prices even lower. Eventually, the last trader who wanted to short has executed his or her trade. Now, this creates a speed bump, if you will, in the price, which implies that any pause at this level will cause the market to transition or reverse into a bullish momentum as there is no more retail selling pressure below it. Once the market reverses, it balances out the inefficiency zone and retests the supply zone where retail traders fully capitulate. Remember this, guys. This is the area where you fully capitulate. And that's when the smart money will enter en masse to short the heck out of the market and push it down yet again. So this is why I emphasized earlier that this seemingly bullish surge here further reinforced my bearish bias. The idea here, guys, is that if no major downward move is observed from the base point, which obviously signals the start of a trending structure, then the area shouldn't be regarded as a supply zone. On a related note, this same concept applies to demand zones too. Now, getting back to our trade, if we zoom into a 1-minute time frame, we will see that after this spring was put in place, a spring, by the way, is a price move below the support level of a particular trading range. So after the spring got printed, the upside the market underwent, including this reaccumulation segment here, was again not a genuine bullish reversal, rather an assessment of the remaining demand by smart money, giving them an idea of whether or not more upside potential was available. Obviously, the formation of this double top pattern, which as you know typically means that market sentiment has shifted from buying to selling mode. So the double top here was another indication of the market's predisposed bearish bias. Also, after the double top, it became clear that a break in market structure after the price broke below this ascending trend line here, which was clearly another sign that buyer demand had receded. So the combination of all these technical factors gave me the bearish confirmation I was looking for. So needless to say, all we have to do at this point is trade in the direction of the present probable range. In other words, the optimal move after the second break of market structure would be to enter a short position following the price's reversal here and subsequent balancing of this inefficiency zone. Here we have our profit target, which as you can see in the chart coincides with this 5-minute imbalance area. So guys, what we basically try to do with this trade here is frame the market contextually so that we could gain a structural insight into its potential reach. I think that this approach enables analytical traders to segment the market in order to make more accurate predictions about where it is headed. And by the way, guys, if you want more stuff about supply and demand zones, please check out this video here. Alright guys, that should do it for today. Thanks for watching and hope to see you in the next one.